Now, what is up, guys? This is Jay from EatSleepProfit, and today I'm going to be talking about my routine. Basically, everything I do from waking up in the morning all the way through the trading day till after the market has closed and towards working towards the next day. So this is basically from around 6:30 in the morning. Well, it depends on where you're from. If you're on the East Coast, you're going to be waking up at around 7 o'clock in the morning, 8 o'clock in the morning. If you're in the central time, you're going to be waking up around 6 to 7. If you're on California time, you're going to basically be waking up yesterday. So the whole thing is, this is my whole routine, how I work for everything. So just a little quick introduction. Started Eat Sleep Profit around early this year. It really didn't catch traction until basically this summer. Started trading out of college, basically in debt, 35,000, and between trading and options and spending a whole bunch of, I'm going to talk about this later, basically spending tons of money on your favorite traders program. After all that and all that stuff, basically being debt, so much money, me basically starting my own thing and giving myself a very solid routine to use. Now I'm basically up between 100,000 and four times that as time has went on. But this is basically the full strategy, not well, kind of the full strategy. I mean, the strategy is built on multiple stuff. So there's going to be multiple videos talking about and me breaking down the strategy, but this is basically going to give you the routine. So this is going to basically give you what I'm actually looking for and what I actually do. So you can replicate that. Then from there, as the videos come out, you can basically improve and chisel away on that. Basically, iron sharpening iron. So, I mean, basically the service is just to get you guys to actually start effectively and just eliminate all the BS that floats around the whole day trading. And I'm probably going to be busting myths, doing all the type of stuff like that. So this is basically ground zero, who I am, what do we do, eat, sleep, profit. Let's get it. Now, here's my routine. This is everything I do from start to finish throughout the whole trading day and basically till the end of the days. And basically in here, I'm going to be talking about different subjects and different things to look for. But first thing I do right when I wake up, first thing you want to do is check your big news outlets. Now, these big news outlets, which you usually see for anything stock related or finance, so you have your CNBC, Reuters, Bloomberg, whatever, basically one that is popular in your area, depending if you're in the UK, wherever, in the US, depending on where you are, this is going to really give you an overall market outlook. Now, if the SPY is down 3%, it's not going to really be a good trading day. I mean, if the old saying basically says 3 out of 4 stocks follow the market. So within that, if you have a big red market day, you really want to be. It's not that you can't trade that day. It's you really want to be more careful when you're trading, just because there's going to be a lot of people that are very skeptical on the whole trading day. Now, if the actual indexes and the SPY is actually up, let's say 3%, and it's just the biggest day, is breaking records, this is going to be something that you can really go more and more into, and it gives you an overall look for the market. You don't trade completely off of what the SPY does. After I basically look at the market and look at all the big major news outlets and stuff and see what basically is happening, what's going on. Stock twits, Seeking Alpha. Seeking Alpha is another good one too. Now, after I basically look for news and just look for anything that's basically trending and what's big, next thing I do, I have a gap up scanner. Now from there, I actually look at specific stocks in the price range that I actually like and the volume range that I like, and I want to scan those stocks to look for these low float, big gap up stocks. Now if I talk about float basically is how many shares are outstanding, or how many shares are basically available for the market. Now, if you see like a big stock, let's say like Apple or Facebook, though there's so many shares available to trade that if you was to buy up 1,000 shares, it would even dent that stock. But if you was to buy up 1,000 shares of one of these low floaters, basically it would raise the price up. So what you're really looking at is volume. As the volume comes in with these stocks, the price spikes exponentially sometimes with these stocks. So that's my whole niche that I really look for to actually trade inside. Now, I actually look for volume percentage within a price range. So the price range I usually look for is between 10 cents and $5 per share. So within that, you really get your penny stocks, most of your stable penny stocks, and between there, you really get most of your small caps. Sometimes I actually go up to $10 per share. Just if I know some stocks have been running for the past couple of days and I still want to keep them on the scanner, I will always just kind of tweak it a little bit. But it's always between 10 cents and about $10. That's exactly where you want that whole range to really catch a lot of stuff. There's stocks below 10 cents, there's stocks above $10 and stuff like that. But my whole niche covers this. Now, when you go above $10 per share, yeah, there's going to really be stocks that take a lot of capital to really buy up shares. If you want to buy 1,000 shares of a $20 per share stock, it's going to be $20,000. If you want to buy up 1,000 shares of a dollar per share stock, really, it's only going to take $1,000. But at the same time, you can make the same amount of percentage gains with every single 1,000 shares that you can more likely in the actual small cap and penny stock area than you can at the higher price stocks. That's why a lot of people are starting to move towards the niche of actually these small cap and penny stocks, rather than if I want to start day trading, I have to go after Netflix, Apple, Facebook, Amazon. A lot of people are actually going towards the niches of these smaller stocks because they run so fast in these short periods of time. You can make up so much gains that will take you days or even weeks to make on these other larger stocks and stuff like that. Now, when I look for volume, I look for anything that's above 200,000. I look for around 200,000 to infinite amount of volume. I don't have any volume cap for the actual upside, but the bottom side, I don't want to look at anything below 200,000 volume just because that's just there's no liquidity there. I mean, if there's only 200,000 shares being moved throughout the day, and especially with the actual smaller stock like this, like 200,000 volume on a higher price stock, a lot of people can't buy up shares as much. But when you talk about these lower price stocks where people can buy up more and more shares, if there's only 200,000 volume going around, that's a really bad sign. So the fact is, I completely stay away from those. You can really actually relatively see the chart patterns with those and how the chart moves. It's a more fluid chart with stocks above like 500,000 to 800,000 to a million volume. Sometimes I used to trade only things over a million volume, but now, I mean, you can really tune in a little bit where you can trade some 500,000 volume stocks, some even 300,000 volume stocks. It depends on how the volume grows and if it starts to build throughout the day. Now, once I scan, I'm completely weeding out all the bad stocks. I'm completely throwing out anything with low volume, low percentage, crap stocks, usually those 5-letter stocks that just nothing has happened with them and stuff like that, blatant pumps and stuff like that. I'm completely eliminating all those. And the way you get to really see that, especially some stocks may look good, like on the 1-minute charts. Let's say you're looking at the 1-minute charts pre-market or whatever, but you're not actually looking at the day-by-day charts. So if you actually look at the day-by-day chart, you can see this chart is in a big, huge downward swing. So the fact is, you're really catching the bottom of that swing if you was to buy into that stock. So you still want to get an overall picture of what's happening with that particular stock throughout that time period, rather than just worrying about what's happening today. Just because past performance usually indicates what the future of the stock is going to do. That has always happened. That's just basic fundamental analysis. Now, once I find a good candidate, I'm aiming mentally where to buy and where to sell. I also alert my chat room on moves, what's going fast, if it's going up or not. It's more of an overall look into what I do, basically, and it's very helpful to guys so far. Now, how do I know where to buy and sell? It's based completely off of technical analysis, what you usually hear called price action. Price action is just fundamentally support and resistance and where the stock likes to move, basically around the short term. Now, fundamental analysis is you're talking about the actual long term of the stock. This is when you look into earnings, you look into earnings per share, you start to look in this and that. Technical analysis is how basically the stock moves, its resistance levels, and basically you're measuring breakouts and breakdowns. Now, this is nothing new or revolutionary, but the fact what it is it's so new to guys because a lot of people just go completely into trading with no previous experience. They use stock picks, pumped alerts, and recommendations. That's all a lot of guys use now. And that's why basically 95% of these traders fail, is because they go in there basically following your favorite trader's picks and his alerts and stuff and buying into all this. And basically it's you're setting yourself up to fail. Once you become someone that can actually find their own stocks to buy and to sell and actually know how to pick things and stuff like now chat rooms and stuff like that and alerts are fine, but the fact is if you completely trade based off of them, that's the only way you can catch moves. There's a fundamental problem in how you know stocks and how you are trading, and that's the whole thing about it. So when you hear 95% of traders fail, nearly half of them do just because they have no foundation in technical analysis. Now if you don't believe me, here's a perfect live example. Now here's the ticker OPTT. Now it's everything I'm looking for. Low float, big volume, been pumped up with hype. Now just look how predictable that price action is in volume. Now, do all trades do this? Nope. Not even 100%. There is no 100% effective strategy. To be honest, it's not even an 80% strategy. My wins and losses basically range around 65 to 70%. But when you only risk $30 to make 100, and you scale from there, you can make. You basically risk $300 to make 1,000. And since I cut losses so quickly, I can really push that loss up to maybe 150 or 160. Sometimes it usually maxes around maybe around $200 a loss, which might sound big to, I guess, the beginner guys. But I mean, when you're actually effectively trading $1,500, $2,000, sometimes $5,000, that's basic. That's nothing. That's maybe only 2 to 3, maybe 4%. But the top range, since I'm playing these breakouts, are so high that the upwards potential is maybe 15, 20% before I really want to get out. So the fact is, I can trade 3 out of 4 bad calls. 3 out of 4 of my trades can be bad calls, and I can still break even at the end of the day or at the end of the week. So the fact is, that's why the strategy is so effective in my nature, actually trading based off of these breakouts. Now, this is how someone not educated in price action and technical analysis actually trades. It is very unprepared, basically buying anywhere trying to sell high, which can mistakenly, you can actually buy at the high. So the fact is, when you buy at that tip where you actually want to sell from actually buying lower, if you buy at that high, there will be profit taking, and profit taking is just natural. You will never have just a green candles going on for days. There will be some profit taking, but within there you have an overall trend you're looking at. Now, if you don't know when to buy and when to sell, you can actually buy at the tip of that candle. And that if you buy at the tip, the fact is there will be a pullback. When they're in the pullback, you will get scared. Oh man, I'm losing so much money. I gotta have to sell for a loss. So when you sell for that loss, you're like, okay, this is a bad stock. But the fact is, it's coming right back up. It's in an overall trend, but you're not recognizing that. You're not looking at the technical side. You're basically jumping in whenever somebody else tells you to jump in, or you're following some alert or some recommendation. And that's why you're never supposed to trade based on any type of hard alerts or recommendations. Now, alerts, if somebody says, oh, this is breaking out, yeah, that's fine. But if somebody says, buy this, if they don't have a financial advisor's license, that's really illegal. So, I mean, just let's just set the whole record straight. Nobody can really tell you to buy a specific stock unless they have a financial advising license. Now, what type of orders do I use? Now, to keep it simple, if I'm buying and selling, I'm exclusively use limit orders. Basically, market orders are faster, but they vary in price based off what other people are selling the shares at. So limit orders only executes buy and sales at a specific price. So if you buy the stock at $1 per share, you're going to get it at $1 per share. Now, there are other orders such as like stop losses, trailing stops. In the short sense, basically, stop losses basically stop the loss. Basically, if the stock starts to dip or whatever at a specific price, it will jump you out of that stock just to really save you some losses. Now, if you set these stop losses very shallow, they can really kick you out of the stock with basically within the noise of what the stock likes to trade within. So you can actually cheat yourself out of a stock that may be going to run up again. They can vary. You can have a limit stop loss. You can have a market order stop loss. Then there's other thing called trailing stops. Trailing stops are different, as in they follow the stock price, and any sharp downward move will really trigger it off. So it follows the stock all the way up until basically it starts to reverse. Once it starts to reverse, it jumps you out of there. So it's a good tool basically if you have to run out and go somewhere. If you live busy lives, most of the time you guys that are really going to start first trading and stuff like that, you're really going to be having normal jobs and day jobs and everything else. So trailing stops is something you really want to learn how to use, especially if you're within a trade and have to go do something, go run an errand. Basically, it saves you, especially if you're already in a positive position. Now, with trading, there's times where a lot of movement happens, and there's just times that it just doesn't. Now, usually around the market open, around 30 minutes after the market opens, in between that window is where the most movement usually happens. That's where all your big spikers, your big morning poppers and gainers usually really happen. And from the end of the day, the last hour of the day is usually called power hour. This is really increased volatility with people buying and selling, people expecting gap ups and gap downs. So they're buying and selling and short selling at this time, basically just trying to see what they actually expect for the after hours trading and for the next day, because some people can't buy and sell stocks in after hours and pre-market. So a lot of people, there's going to be a lot of buying and selling going on, volatility through the roof. So that's one place really more gains can be made. But there's another right in the middle, which I really call reversal time. This is where stocks that make big gains or losses in the beginning usually tend to reverse themselves. I mean, it's really based on like a rubber band theory. I mean, if you stretch this stock in a certain direction so far, so quickly, sooner or later it's going to have to reverse itself. I mean, there's an overall trend you want to follow, but sharp moves usually are always corrected. So the fact is, there's ways basically if a stock dips too hard, you can buy in at that low time and expect it to come back up. Really, dip buying or short selling spikes and whatever and stuff like that, that all deals within that reversal time. This strategy takes more time to finesse and to perfect. It's something geared not towards beginners, and I rarely even worry about reversals, really. Now, that's basically my whole routine. I mean, that's nothing left out. That's exactly everything I do day by day. Now, I can be more specific with it, and that's what I'm really going to get into in later videos, basically talking about if you want to learn, okay, what is level 2 and how do you use that, or how do you know when to buy a breakout, or how do you know how to do this, or momentum. Do you do momentum trading? How do you do options or whatever? That's what I'm really going to cover in later videos. This is basically me talking. This is really almost an introduction and really me going over the whole routine, so you can basically get in to know if you're just a pure beginner and you really never had any experience trading, know what to look for. It's not really going to be anything that's really going to be out of your norm. So you're really going to know you're going to have to wake up early. You're going to have to look at these type of sites. You're really going to have to get used to that. You have to know what these scanners are, how to put in different parameters for scanning, know when to buy and when to sell. In between there, know that basically there's after hours pre-market trading and stuff like that. Basically giving you an overall sense of basically what does a trader's life look like. And with that, I mean, if you have any questions or any type of thing, advice you need, I always give out advice for free. So I mean, all you have to do is email me, DM me on Instagram, tweet me, whatever it is, anything you really need to ask, I'll end up giving it to you. I mean, I only have 14.84 gigabytes of 15 gigabytes used for emails. I mean, everybody emails me like 50 times a day, and I still answer every single one, just because that's who I am. But that's all you really need to know. This is Eat Sleep Profit. Follow us on Instagram, Twitter, Facebook. I don't even think we have Facebook. Do we have Facebook? Yeah. So follow us and have fun.
Another one.